Welcome to Mattfolio, and today I'll be talking about why I believe PayPal is highly undervalued. So let's talk about the inevitable. Obviously, it's down on that precipitous decline, tumbling from around 80% from its all-time high and really going back to those 2017 levels. But there's just a couple of inevitable facts that you really have to think about. That positive year-over-year growth, it's all there. The growing user base and digital payment adoption, it's all there, yet the stock is plummeting like a skydiver without a chute. And there's a cocktail of possibilities of why the stock is down this much. So number one, we have that pandemic hangover, right? The PayPal's pandemic-fueled boom wasn't really that sustainable, and the correction was obviously inevitable. And right now, on top of that, with those market blues, is really pushing that overall bearish market sentiment, dragging down companies that are super healthy like PayPal. And in my opinion, I believe that creates the perfect recipe for a buying opportunity. So now let's really go and focus on what I believe is the most important metric, and that's that revenue growth. So PayPal is up 7.67%, and one thing I really want you to focus on is that PS ratio, that price to sale ratio, and 2.29 is extremely low, hinting that it's very undervalued. To really put it into perspective, over the last 5 years, PayPal has been hovering around 4.2 to even 15, and the market average is around 3.5. So even if you look at it from a larger market perspective, it's still a super undervalued stock. And we all know that the last key metric is cash flow, and there's really one thing I want you to look at despite seeing that slightly negative operating cash flow trend that we're seeing on the TTM, the trailing 12 months. And that one statistic is the investing cash flow. For the first time, we're not in a deficit, and that really shows that change of direction that we're looking for. And I really do think in the bigger picture, long term, that really increases the financial flexibility that this company will have. So let's last focus on what the most important thing is, and that's that $1 million question of what the price target is be. So there are really two scenarios that I could think of that could really happen within the next coming months. And number one is a climb back to the $89 range, reclaiming some of that lost ground. And number two, what I think is more and more likely until we get those anticipated earnings for Q4, is that sideways shuffle that we might continue seeing. And that's that current consolidation phase might extend with the stock hovering around maybe $60 to $70 for a while. And it's waiting for that catalyst like those earnings that are going to come out to really break that deadlock that we're all seeing and so frustrated with. If you want to see more videos like these about super undervalued, underrated stocks, I highly recommend you leave a like and you subscribe. And always remember, this is not financial advice. The only way you can really tell where a stock will go is time.